Simon Dixon here for another update on the crypto market. So today what I'd like to discuss is a really interesting trend, and that is the concept that for the first time in human history, a company can compete with a government's currency by issuing their own cryptocurrency backed by the government's currency. So if you've checked out some of my previous videos, one of them I talked about 6 forms of money. And there's a new form of money, which is, well, it's not really new. It's things that companies like PayPal and other companies and banks have actually been doing for a long time, which is creating a digital representation of the government's currency. Now, banks were the inventors of the stablecoin. It came in a different format because they backed all of their stable coin by debt. So when you have a digital balance in your online banking, essentially you have a digital representation of the currency that the government created. But in order for it to exist, the regulators have issued a license to the bank in order to create money every time they issue a loan. I don't want to go too deep into all that. You can check out other videos where I went into this subject in depth to help you understand the different forms of money. But now companies are essentially taking that money that is held by a bank. And remember, the money held at a bank is a digital currency, which is backed by debt that represents the currency that the governments are creating through cash and notes. But now companies like PayPal were the most popular to do this, but taking the money held at a bank and creating a new digital representation of that money held at a bank. And stable coins do just that. They use blockchain technology in order to create a digital representation of the money held at a bank, which is a digital representation of the government's currency backed by debt. So you've got these different products that are built on top of each other. But now what I think is really interesting is that because of the ability to move and clear funds so much faster via a blockchain, whichever blockchain is built upon, you've created an increased and interesting new use case and also a new currency war. So the most interesting example more recently, if you check out my previous videos on how banks are going to be reacting to Facebook and how governments are reacting to Facebook's cryptocurrency, is because essentially Facebook are going to take a basket of assets, and they're claiming with the Libra project to be able to create a cryptocurrency that represents those baskets of assets. And now governments and central banks and regulators and every 3-letter institution in the world is outraged because it's competition for them. So you get the exact same scenario now where corporations are now entering the game to compete with central banks well, they're not competing with central banks, they're competing with banks, because banks had the monopoly on digital currency creation, and they're moving towards a full reserve banking system because most of these stable coins are backed by obviously fiat currency, which is created as a fractional reserve. But at least it's a movement towards full reserve, especially if these financial systems get more and more adoption. The interesting case is that because we're operating off a debt-based Ponzi scheme called fiat currency, if these systems get ultra high adoption, it actually can cause major financial instability and recessions because you've got the money is being used and not being created as debt. And therefore that doesn't increase the money supply, which is one of the government's goals when they're lowering interest rates and pushing people into debt. So it renders some monetary and fiscal policy ineffective if these things get ultra high adoption, and leads to a contraction of the money supply, which leads to a recession and a deflationary environment on the economy, which central banks will be looking to counter, and governments. So this creates really interesting scenarios. But this video is going through the latest news, which is that Tether, the company, is looking to issue allegedly a stable coin backed by the renminbi, the Chinese yuan. Now, this is a very brave move, and I do need to put out some disclaimers before I continue. So firstly, Tether is owned by a parent company called iFinex, and I am a shareholder in iFinex. But none of what I'm talking about today is insider information or confirmation from the Bitfinex team, because the Bitfinex team have not confirmed, the Tether team have not confirmed this. It's just allegedly going to happen. Secondly, I am a major shareholder and the CEO of banktothefuture.com, which creates a secondary market for qualifying investors to buy and sell shares in iFinex, the parent company, which Tether is a subsidiary of. So feel free to take any of my opinions and views as self-interest, and do your own research, and do not make any investments or financial advice based upon these things, because it could all just be rumors. I haven't had anything substantiated by the board of Tether or Bitfinex or iFinex. So those disclaimers are just there for you to understand and take all this information as you wish. So firstly, what is the use case of a stable coin? Really, the use case of a stable coin is a very useful product, and it's reflected in the volume. Bitcoin and Tether are the highest volume cryptocurrencies on sites like CoinMarketCap, which list the different cryptocurrencies, and you can always see the volume with Tether is huge. And that's because it has a genuine use case and utility. And that is that people want to move money outside of the banking system faster, cheaper, and more freely. Now, obviously, when you convert fiat in and out of these stable coins, then you have all the friction of the banking system and all the challenges of the banking system. And so it reaches this hybrid use case, as it were. Obviously, there's lots of friction when you are converting your fiat money to a stable coin. You have to go through all the KYC, AML processes, source of wealth, source of funds, everything that you need to do as a regulated institution in order to convert your fiat and get it into the cryptocurrency market. And the same will happen on the way out. But while you are in the market, you're able to freely flow via a blockchain-based transaction. And therefore it achieves many of the goals of the government that are looking to do KYC and AML on the way in and on the way out. But you get the benefit of being able to freely flow money in an environment where, as long as that counterparty is still alive, then it's relatively frictionless. So what is the difference between the two largest volume cryptocurrencies, Bitcoin and Tether? And then we'll go through the news and how it affects China. Well, essentially, how I see it is Tether is very useful when you need to have a stable environment, when all of your goods are priced in fiat currency. You need to make a purchase, but you're not sure when you're actually going to need to make that purchase, and therefore you can hold value in the strongest fiat currency in the world, which is US dollars, and the most used currency in the world, which is US dollars. Now, obviously, US dollars is still a debt-based Ponzi scheme, and so as long as that system is alive, then and the things are priced in these different currencies, then you get a relative degree of stability compared to if you just hold your funds in Bitcoin when you're trying to make a transaction. So really, in a nutshell, the way that I see the world, and it works for me, and this may not be right for you, you can't take this as financial advice, it's just the way it works for me, is that Bitcoin is a great way in order to hold your savings. But when you need to make quick purchases, I'm more than happy to send some Bitcoin over to somebody. There's no more convenient way of paying somebody. And if they're in a financial position to be able to take, where they don't need their Bitcoin in order to meet their monthly spending requirements, then it doesn't really matter to them if they buy into the economics of Bitcoin and many of the reasons why I think it's a great place for me personally to park savings. But then when you need to actually make a purchase, you start to realize the full force of the problems you can have. So I'll give you an example, a real world example. So, Bitcoin, again, a good place to parking savings, but there was a point where I wanted to make a major purchase, which is purchase a house. Now, I knew that in order to make a larger purchase, and using Bitcoin in order to get that into the fiat system and the banking system, when the person selling the house might not necessarily want to accept Bitcoin directly, there's going to be a huge process of getting that money into the banking system. And in fact, it took me 9 months to prove the source of funds, source of wealth, prove that the proceeds were not the proceeds of crime, complete the KYC, prove that I legitimately actually, acquired that wealth and all sorts of stuff. And then you've got the politics of banks not wanting to support it. They see it as too high risk. They don't make enough money. Their money is made when they issue a mortgage. And if you're not buying something with a mortgage, then they just get a small transaction fee. And for them, they just see it as a bunch of risk with very little gain. And if they're, a clearing bank, then their money is not made out of deposit taking because they have a license to create money every time they issue a loan. So if you're not borrowing the money, you're not a good customer for them. They don't really care about your deposit anymore, unless they're a smaller niche bank that operates off a more full reserve banking model. So we found a small niche bank that does care about deposits. Went through a 9-month process of getting lawyers, tax advisors, and everyone to prove that these weren't the proceeds of crime. Now, in that 9 months, the price of Bitcoin was hugely volatile relative to the currency that I was going to purchase a house in. So Tether was an extremely useful place to park your money. Now, there is an upside and a downside. The upside is that you get to have certainty about how many Bitcoins you will need to spend in order to purchase that house. And the bank can take as long as they want to allow that transaction to happen, and you can just park it in Tether. The downside is that you're taking counterparty risk. A stable coin is only as strong as the counterparty that's backing it or making the promise that it's backed. And so therefore, a government could come along and they could decide that stable coins are no longer legal, and they could seize all those funds, or something can happen. So essentially, you're operating within the same as the banking system at that point. But it's interesting now that you can choose who to take your counterparty risk with. Do you want to take your counterparty risk with a private company? Maybe you trust that private company more than your bank. Maybe you believe that the money will be more free flowing in this format than it is with a bank, because when you send larger transactions with a bank, if they don't like how you're spending your money, they can stop it. And also they own that money. So you're subject to the risk of bail-ins and bailouts, and a hugely systemically risky financial system that we operate off today, especially in times of financial uncertainty. So really, you have this trade-off between counterparty risk and stability. And so really, this is the speculation that you're making when you engage in a stable coin. But it's a useful thing. But as long as you understand the risks that you're taking, then you can decide, well, savings go here in Bitcoin. If I need to make expenditure, then I can hedge some of it using a stable coin. But I also know that that can freely flow within the stable coin environment, but there's friction when you turn it into fiat, but you can hedge in the meantime. So these are the financial decisions you have to make when weighing up how you use it. But also stable coins are a great way of getting money from one exchange to another and just free flowing, and that's why there's huge volume. It helps with certain use cases like remittances. So people, there's a lot of Tether usage between Russia and China. It's very popular in China due to, certain capital controls and some of the things that we'll discuss in this video. So that was an introduction. I didn't really mean to go in for that long, but I thought it's important information in discussing the interesting new speculation that Tether will be launching a renminbi Chinese yuan based stablecoin. So let's jump into that topic. So China is a really interesting economy. Obviously, They are launching their own digital currency based upon a blockchain. So the central bank is competing with the private banks. Now, in China, that's a slightly different scenario than most economies. In most economies, you have a private banking system, which is a bunch of private banks competing. They secure a banking license. The regulator and the central bank give them a license to create money every time they issue a loan, and a license to increase or decrease the money supply every time they issue a loan or a loan gets repaid or is defaulted. See the 6 forms of money if you want a greater description on that. Go head over to YouTube, type in Simon Dixon, subscribe to my channel, hit the bell button. YouTube will give you a notification, and you can check the previous videos, and you'll see lots of things on Facebook's currency, the financial crisis. Each time there's a topic, we'll dig into that. But the China Central Bank, PBOC, the People's Bank of China, is creating a digital currency. Now, why this is not really a major move in China is because almost all of the banks in China are owned by the government anyway. So, as a communist stroke, capitalist hybrid economy, the government own most of the banking system anyway. So the central bank competing with the retail bank is not as controversial as it might be if it was done in another economy which operates off a private banking system, where it's a bunch of private banks that create the fiat-based Ponzi scheme. So really, it's just the central bank issuing a digital currency, which might be a much more efficient way than operating a network of private banks, and all the challenges and costs and overhead that come with that. So this is a complete efficiency improvement for China. Other economies, it's more controversial because this is the central bank competing with retail banks. When they issue their own digital currency, they're creating a non-debt-based version digital currency to compete with the debt-based digital currency issued by the private banking sector. And they can use that to hedge against the collapse of the banking system and allow everybody to exchange their balance that they held with a bank that they might allow to go bust, and exchange it for a digital currency from the central bank. So PBOC are not going to like this at all. It's a very punchy, ballsy move from the Tether team, but we'll see where this goes next. And that's why some people, some exchanges based in China are finding this a very controversial move, because if they're based in China, they know the full force of the Chinese government and what they'll do in order to protect the integrity of their currency and their control over the financial system and the economy at large. So the other thing to be aware of is the interesting argument this creates in capital controls. So countries like China, they have a very tight control and regulations over how much foreign currency one can actually use. And so in the case of China, the individuals in China are only allowed to hold a maximum of 50,000 US dollars worth of foreign currency. And there is a very tight regulated environment in order to acquire foreign assets and set up structures to acquire foreign assets. And it's very difficult for the people in China. Hence why Tether is such a big thing, because they can send the funds to a cryptocurrency exchange, and then they can operate within that system, and they can use Bitcoin for savings or stable coins for remittances and transacting. And it creates a really interesting political environment. But when a currency, essentially where this becomes interesting, is that if the banks in China are able to create a digital representation of the renminbi or the Chinese yuan, then is another company outside of China allowed to create a derivative, as it were, of the Chinese currency, and what jurisdiction does it have? So it can obviously ban an IP block Bitfinex's and Tether's website, just like it has with Facebook and Google and various other things. And they can say that they can implement, they can put the full force behind it. But especially when it's competing with PBOC's digital currency, and they don't get the data collection from it. So it's a very interesting move. A stablecoin based upon the Chinese yuan renminbi is a very interesting. I'm sure it will get lots and lots of adoption, will be very, very popular, especially as a lot of people that use Tether use USDT, are based in China as well, from what we can see. But this creates a really, really interesting things. Allegedly, the ticker for this new renminbi-backed stablecoin is CNHT. We haven't got that confirmed yet. That's just the speculation. You know, is the fact that renminbi, it has to go through very much, you know, most people have to get government approval in order to use renminbi in order to buy any foreign assets or use before they can send it anywhere. So that's the latest news. It creates, again, another really, really interesting set of events in these currency wars. Add to the fact that China and the US are engaging in trade wars, currency wars, a fight to launch PBOCs, digital currency, competing with Facebook's cryptocurrency. Then you have the forces that America are probably going to have pressure to allow Libra, the cryptocurrency, to happen so that they can implement some kind of controls over Facebook, an Irish entity, but also a US entity. And they can then get all the data collection backdoors and to the NSA and all the things that they want. So now it's really a competition for who's going to get all that data, who are the governments going to allow, and what jurisdiction do they have. So it's extremely interesting times, and I will be giving commentary as all these events unfold, so that you can stay up to date with what's going on in the financial system, try and make it a bit more simple for you, and so that you can make your speculations and do your own research and have more information, because you've got two choices. You're either going to be at the mercy of the system and allow all these decisions to be made for you, or you're going to be making your own speculations. But one thing that does not change is that we are in a speculation-based economy, and you either have people do it for you at the mercy of their decisions, or you do it yourself and you make your own conscious decisions. So that's going to do it for me today. That's the news for today. Please do share, please do retweet, please do like, please do comment. Tell me what you'd like to see in future videos. Tell me what you think of this. And also head over to my YouTube channel, Simon Dixon, hit subscribe button, hit the bell notification. YouTube will send you an email every time I create one of these videos so you don't miss any of them. Follow me on Twitter. They go live on Twitter. And I got a page, a Facebook page, Simon Dixon, but I'm more active on Twitter and YouTube at this stage. So I'm going to get back to work, helping companies build the future of finance, and I'll see you in the next update. Thank you for your time.